You checked your balance this morning and $35 was just gone. Not stolen, not a mistake, charged completely on purpose for the crime of spending $4 you didn't technically have. By the end of this video, you'll know why that fee exists, why regulators tried to make it nearly disappear, and why one signature undid all of it, permanently, by law, before the fix ever took effect. But first, let's talk about who this fee actually targets. It's not who you think. Here's the number banks don't advertise. 9% of accounts generate 79% of all overdraft and insufficient fund fees. This isn't spread evenly across everyone. It's concentrated on a small group of people who overdraft 10 or more times a year, and the typical balance in those accounts is under $350. Federal Reserve research has found Black consumers pay overdraft fees at roughly 17%, compared to 10% of white consumers. Separate CFPB research found Black and Latino households are 84% and 89% more likely, respectively, to live in a household that overdrafts frequently. So it's a hard fee to only feel a little at a time. It's a fee that concentrates hardest on people with the least room to absorb it. You'd think a fee this lopsided would be an easy regulatory fix. In December 2024, the Consumer Protection Agency that oversees banks finalized a rule aimed directly at this. Big banks, the ones holding more than $10 billion in assets, would get three options. Cap their overdraft fee at $5, cap it at whatever it actually costs them to offer the service, or keep charging their current rate, but only if they disclosed it like any other loan, interest rate included. The agency's own estimate, $5 billion returned to consumers every year, about $225 back per year for the average household that pays these fees. The rule was finalized. It had a start date, October 1st, 2025. So the story ends there, right? Regulators noticed an unfair fee, fixed it, done. Before the rule ever took effect, banking trade groups sued to block it, and Congress used a specific legislative tool called the Congressional Review Act, a fast-track process that lets lawmakers overturn a federal rule with a simple resolution. The House voted 217 to 211. The Senate passed a matching resolution. In May 2025, it reached the president's desk and he signed it. The $5 cap was dead before a single consumer ever benefited from it. Here's the part almost nobody talks about, and it's the twist that actually matters. Under the Congressional Review Act, once a rule is overturned this way, the agency is legally barred from ever issuing a substantially similar rule again. Not next year, not under a different director, not ever, without new legislation from Congress itself. This wasn't a pause. It wasn't sent back for revisions. It was a permanent door, welded shut on this exact fix forever. So if you assume this just meant try again next year, that's not how the law works here. Which raises the obvious question. If the rule is permanently blocked, is anyone still doing anything about this fee at all? Here's where it gets interesting. Even with the broad rule dead, the same agency has kept bringing individual enforcement cases using its existing authority. Bank of America was ordered to pay more than $100 million for, among other violations, charging the same non-sufficient funds fee twice on a single transaction. Regions Bank paid $191 million over illegal surprise overdraft fees. Navy Federal Credit Union, whose members are overwhelmingly service members, veterans, and military families, was forced to return $80 million in fees regulators called illegal. So the rule that would have protected everyone automatically going forward is gone. What's left is a slower, case-by-case system. One bank, one fine, one lawsuit at a time after the fees have already been collected. One version of this system stops the fee before it happens. The other one waits for someone to get caught and pays you back after the fact. Only one of those still exists right now. You don't need a federal rule to protect yourself from this specific fee. Most banks let you opt out of overdraft coverage entirely, meaning a declined transaction instead of an approved one with a fee attached. For a lot of people, a declined $4 coffee is a much better outcome than a $35 penalty. Check your bank's app right now for overdraft protection or overdraft coverage settings. Several major banks have voluntarily reduced or eliminated these fees entirely in recent years, without being forced to, which tells you the fee was never truly necessary to keep the lights on. It was a choice. A regulator studied this fee, calculated exactly what it should cost, and wrote it into law. Congress used one of the fastest tools available to erase it, and made sure it could never be rewritten the same way again. The fee didn't disappear. The rule that would have capped it did. This has been Fox Method. Next time, why every website you visit might be showing you a different price than your neighbor.